Hello friends, in this video lesson we are going to discuss Indian financial system. Friends, first of all, what is meant by financial system? Financial system is a structure in the economy which mobilizes capital from various surplus sectors of the economy and allocates and distributes the capital to various needy sectors. Let us try to understand it. What is financial services system or what is financial system? So it is a structure in the economy. What is role of this structure? The role of this structure is that it mobilizes the savings from the savers and distributes those savings to needy sectors of the economy. And those needy sectors could be in the form of investment, or it can be in the form of consumption. So that sector of the economy, that system of the economy, which mobilizes capital from those who have surplus, they are savers, and it allocates capital to those who are in need of capital. It may be investors or it may be for the purpose of consumption. Now all this is done through a number of financial intermediaries. Let us see who are important financial intermediaries. Important financial intermediaries include banks, financial institutions, mutual funds, non-bank finance companies. So they all are important financial intermediaries, and these intermediaries are functioning in one or other sectors of the economy, in one or other sub-segment. So for example, banks, they are primarily catering to short-term requirements. Financial institutions, they are primarily catering to long-term investments or long-term requirements. Mutual funds, they are primarily engaged in capital market activities. And non-bank finance companies, they are primarily supporting the banks and financial institutions' efforts. Now, different segments of Indian financial system. Indian financial system has four important segments. The first one is the money market, second one is the debt market, third one is forex market, and fourth one is capital market. What functions are discharged by these? So let us first see money market का क्या role है. So money market deals with call money and notice money. When lending and borrowing is done for one day, it is called call money. When lending and borrowing between banks is done for more than one day up to 14 days, then it is called notice money. Then money market, another instrument is treasury bill. Treasury bills are issued by government to borrow money. Then term money. Term money is primarily borrowing and lending between banks for a period more than 14 days up to 1 year. Certificate of deposit. This is an instrument of borrowing by commercial banks for the purpose of large size deposits. So जब भी बैंकों को large size का deposit लेना है, so they do not issue fixed deposit, rather they issued certificate of deposit. Commercial paper is used by large companies, reputed companies, for the purpose of borrowing money as a substitute of their cash, credit or working capital limits from banks. And repo transactions, these are primarily the transactions which are between banks in terms of government securities and in terms of corporate securities. So these are different instruments in money market which are used. And there could be commercial bills as well. In a debt market, which type of securities are used? In a debt market, we have government securities. Now these government securities can be central government securities, or these could be state government securities. These securities can be of short-term nature. These securities can be of long-term nature. These securities can be in the form of loans. These securities can be in the form of bonds. Let us see different type of bonds. So bonds can be issued by financial institutions. Bonds can be issued by public sector undertakings. So bonds can also be issued by corporate bonds. So these bonds are generally of unsecured nature. इनके लिए इशू करते समय issuer कोई सिक्योरिटी ऑफर नहीं करते. So normally they are of unsecured nature. In foreign exchange market, we have various instruments in foreign currency. So foreign currency में different type के instruments हैं which are used in the foreign exchange markets. So these instruments may be number 1 forward contracts, number 2 options, or we can call it them currency options, or these can be currency swaps as well. So these are different type of instruments which can be used or which are being used in foreign exchange markets. As regards capital market, in capital market we have primarily the shares, that is also called equity, debentures, that primarily is a debt. Now shares can be equity shares, shares can be preference shares also. So debentures are just like bonds. Bonds are normally unsecured, whereas debentures are basically secured instrument of borrowing. Now there can be mutual funds also. Mutual funds collect savings from individual investors and then they make investment in shares or debentures. Now different regulators in financial system and what role is played by these regulators. So major regulator is Reserve Bank of India. So Reserve Bank of India primarily is regulator of banking system. So we also call Reserve Bank of India as a central banking authority. So it is a central bank of the country. What are the different functions? So first important function is regulation of money expansion. So how money expansion is regulated? After some time we shall look into that. Then supervision over banking system. So how supervision is done, that also we are going to discuss in detail. Then management of government debt. Then functioning as banker to banker. Then lenders to banker or lenders to banks. Then money market regulator. So these are different category of functions which are performed by Reserve Bank of India being a central banking authority. और इन सभी को हम डिटेल में डिस्कस करने जा रहे हैं. Another regulator is the Securities and Exchange Board of India. In short we call SEBI. So SEBI is a regulator of a capital market. और capital market में ये किस चीज को रेगुलेट करता है? So it controls and supervises number 1 equity markets and number 2 debt markets. So equity market can be in the form of equity shares or these can be in the form of preference shares, and the debt market normally is in the form of bonds and debentures. So this is regulated and controlled by Securities and Exchange Board of India. It is also supervisor of stock exchanges, brokers, investment bankers, foreign institutional investors, mutual funds, listed companies, and also the service providers in the capital market. So SEBI is a regulator or controller of capital market. It not only regulates equity and debt markets, but it also supervises the stock exchanges, the brokers, investment bankers, and what role is played by these individual intermediaries, that also we are going to discuss in detail. Then other two regulators are IRDAI and PFRDA. IRDAI, Insurance Regulatory and Development Authority, they are regulated primarily of insurance business or insurance system, and PFRDA, so Provident Fund Regulatory and Development Authority, so they are primarily in pension and provident fund regulation. So they are regulators of insurance and pension fund system. So they provide regulatory framework for insurance business and pension business, and they also supervise over insurance business and pension business. So all intermediaries in insurance business, they are regulated by IRDA, and all the intermediaries in pension and provident business, they are primarily regulated by PFRDAI. Now they also frame rules for insurance companies so far IRDA is concerned, and PFRDA, they frame rules for pension funds or provident funds. Detail of the functions we are going to do in next part of this lecture, friends. Thank you.